Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risk. Today I'm covering Lyft, the ride-sharing company that's in the number 2 position to Uber, but they have an interesting future ahead with autonomous driving, and I think that is going to help the company beat the market over the next 5 years. So let's get started with the company's business strategy. Lyft is a ride-sharing service, so this is very similar to Uber's business model, although they haven't moved into other things like food delivery at quite the same extent that Uber has. But the fundamentals of the business are similar. They connect supply, which is drivers, with demand, which is riders. And Lyft may have more momentum than it seems. In the last quarter, third quarter of 2024, bookings were up 16% to $4.1 billion. Rides were up 16% to 217 million. And there was a 9% increase in riders to 24.4 million. But the growth opportunity for Lyft is not in the current business. Autonomy is, I think, where this company could shine, and that's where the growth opportunities come in. The reason Lyft is compelling is because this could break the network effect stranglehold that Uber has on ride sharing. Uber has clearly won that market, and it would be very difficult for Lyft to not only attract riders, but also drivers to beat Uber at their own game today. But autonomy changes that. Lyft could potentially bring a flood of new supply to the market, attracting more and more riders and growing the business that way, essentially leveling the playing field with Uber. They've already announced partnerships with Mobileye, who's going to basically allow any company building with their technology to just tap into the Lyft network. It has a deal with Nexar and May Mobile in 2025. So just next year, riders in Atlanta are already going to be able to get an autonomous vehicle on the Lyft network. So I think autonomy could 10x the size of the ride-sharing market. And given the fact that Lyft only has a $5.6 billion market cap compared to a $128 billion market cap at Uber, the upside is well over 10x for Lyft if both the market grows and they can close that gap with Uber, even just a little bit. But of course, there are risks. Autonomous driving may actually bring other new entrants into the market. These may not be the only two players. One to watch there is going to be Tesla, who is at least in theory going to build their own ride-sharing network. Lyft may also not be successful in launching autonomy and may fall from the number 2 position in the US and Canada to 3rd or 4th place. That is probably the biggest risk that Lyft faces today. So this is not a slam dunk investment, partly because it's not currently the industry leader. Where there's a huge opportunity is if they are able to become that leader in autonomy. So let's go to my prediction. I think Lyft is an attractive risk reward potential. Forward price to earnings multiple is just 13. Yes, you heard that right. In 2025, analysts are expecting over $1 in earnings per share on an adjusted basis. So that's a pretty cheap stock. The price to sales multiple is just 0.9 compared to 3.1 at Uber. And I think autonomy could potentially change everything, both growing the market and allowing Lyft to have a much better strategic position than they've had in the ride-sharing market with the 2 leading players today. So to recap, Lyft is a well-known ride-sharing company in the US and Canada with momentum in the current business, but disruptive potential if they're able to attract more supply to the market with autonomous driving vehicles. This could open up a 10x or greater opportunity for Lyft. Now at The Motley Fool, your comments make us all smarter, so please comment with your own research and insights about Lyft and tell us what you want to see next time on Crunch Time. And don't forget to check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. We'll see you here next time.